All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live streams. Anytime I share the links on X, they get hidden due to the fact that we are no longer allowed to post external links on X that get broadcasted out to everybody. So even if you have your notifications on X, you might not get it. So follow, turn the notifications on. That way you don't miss any of the free content I'm putting out here in the future. If you're nervous right now, you came to the right place, baby. Welcome back, everyone. We are back. We are just here to have a great old time tonight. If you haven't turned on your Twitter, just don't and stop looking at Twitter, please. But if you haven't heard already, we're down quite a bit in this futures opening, which is no problem. No problem, he says. No problem. I need everybody to just take a deep breath and relax. We're going to work through this. We're going to go through all of our charts tonight, and we'll have a nice time, okay? Now, while I do this ad read, I want you all to just go to the pinned tweet on my account, okay? This is a prerequisite. If you don't do this, this whole call is going to be useless, okay? Go to the pinned tweet on my account and just scroll for the minute, whatever it is, while I read this ad, and then we'll come back and we'll talk some market, okay? So let's do it. All right, this sponsorship is from Rumble, one that is incredibly important to the survival of the company. When Rumble first started in 2013, they built the platform for the small creator. They didn't censor or have biases. They were fair and treated all creators equally. No one thought platforms would censor political conversations or censor opinions on COVID, but they did. Facebook admitted they fell to the pressure from the Biden and Harris administration. Rumble did not. They held the line, and they are attacked daily for giving us a voice to talk to you. They are attacked in corporate media. They are attacked by governments like France. They are attacked from brand advertisers who refuse to work with them. Corporate America is fighting to remove freedom of speech. Rumble is fighting to keep it. Rumble won't survive with brand advertisers. They don't get much of it. Watching our show on Rumble is the most they can ask from you, but if you really believe in this fight and if you have the means, one major way you can help Rumble survive is by joining Rumble Premium. Join the community that believes in the First Amendment and believes in our human right to free speech. Rumble is offering $10 off with the promo code STUDIO when you purchase an annual subscription. Go to rumble.com/premium and use promo code STUDIO. Like I said, if you have the means and believe in the cause, now is the time to join Rumble Premium. If you don't have the means, we're just happy if you watch us on Rumble. Okay, so I hope everybody went back and just looked at that pinned tweet real quick. I hope you just looked at it real quick. But right now, we're going to go through some charts, okay? And I'm going to tell you that the end of the world is not quite here, okay? So everybody take a deep breath, relax a little bit. I know everybody's a little high strung, especially if you go on Twitter. And I think a lot of that nervousness or, really panic just comes from not really having an idea how the market works, right? And let me explain it to you, right? You could, by the end of this call, you could say, oh, this dude's full of shit. I'm going to do my best to show you with as much evidence as humanly possible that right now you need to stay calm and not shit yourself, all right? Don't do that. All right, so let's just take a look here. We'll start out. Right now, I have two split charts. I have my quarterly NASDAQ and I have my quarterly S&P, okay? And you will notice that on both, in terms of our overarching range from the lows we set in October 2022, up to our highs that were most recently set, we had divergence at the highs between SPY and ES. That's no problem. You have your October highs and you have your January highs for the S&P. Okay. If you will notice, and if you went and did what I asked you to do and go back to the pinned tweet on my X profile, you will notice that one of the major components to my trading model, the Mando model, which is one of a few that I teach in the Discord, but inside the Mando model, one thing that is extremely important is the idea of A, identifying a range, but B, understanding what is premium and what is discount. Okay. So I'm going to draw this out for you nice. I'm going to use this S&P. It's a little bit more clear right now, but if you are inside, or I'm sorry, I should say above 50% of a current range, you are in premium of that price run. If you were below 50% of that price run, right? 50% being equilibrium or fair value, okay? Get that into, start thinking that way, okay? Equilibrium, right? Right off 50% of a given price run, or fair value of this range. Anything below that 50% is deemed as discount, okay? And now I'm going to throughout the night, but I'm going to, be a little annoying about this, but now that we have satisfied our discount requirement on the S&P, you will notice that we tagged 50% on NASDAQ, but we did not quite get down into this imbalance. So for me personally, I actually think the worst is way behind us. In the past, we've had to wait a long, long time for price to ultimately gravitate down towards discount of a range. Okay. And if anything, when you call this, a correction, a bear market, whatever you want to call it, to me, this is a crash. Okay. The rate and the speed in which we got down into discount of this range, this is like COVID. This is quick. And just for reference, I just want to show you guys COVID because, you might be like, holy crap, that's pretty crazy. Okay, so let me scroll over now, just for reference. Okay, we took out the high of this price run, and apologies for these levels. Every time that we get a shift in the contract, these levels they mess up. So I'll redo them right now. There's no problem. Okay, but just for reference, we took out this price run with this low up to our high. Okay. Now it's very, very, very important that you watch this next thing. Okay. Look how quickly from those, the high of COVID or pre-COVID down to that COVID low. Okay. Look at how fast this occurred. We got down into discount in just a really short period of time. Kind of similar to what we saw right now. Getting down into discount, more specifically, a bullish imbalance. And on top of that bullish imbalance, this is a bullish breaker. Low, high, lower low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward. Price ultimately gets into that breaker. Price ultimately gets out of that breaker to make a new all-time high at that point. Okay. Now here's the difference, right? I'm talking about, to me, this is a crash. Okay. Why am I saying that this is a crash, right? Take a look at what we saw throughout 2022. I think everybody forgets about 2022. I don't know how you could forget about it. Maybe you weren't trading actively at that point, but this was brutal. It took forever for us to ultimately gravitate down towards discount. But here it is. The price run that took out that pre-COVID high was from our low here up to our highs of 2021. Now over the next, this is November, down to December. So a year for us ultimately to get down to discount of this current dealing range. Prior to that, we get into our bullish imbalance and discount of a bullish range, and we get out and we run for highs yet again to complete the Mando model. Okay. Now think about it. Where are we currently? Okay. If we want to stretch this out from a wider lens, in which we can do from a quarterly, that's how I really want to map this out. From your lows up to your highs, we got discounted, but we are not in that bullish imbalance yet. Once we get into this bullish imbalance, I'm going to feel much better about this. I'm going to be happy about this. Okay. Now, one thing that's worth noting, okay, while yes, we did get discounted, we are inside an imbalance on the S&P. Okay. Let's slide over and look at our monthly. Can we justify a world where we get down to this lower imbalance, which is 15,721? Yeah, I think that's fair. Do I also think it could be fair for us to get into this and take off? Oh, yeah. Now, how am I going to know when the bottom is actually being put in? Okay. Because once we get down into discount, my short bets are off. I am no longer looking for runs lower, right? Take previous price runs like 2022 and the COVID price run as well as an example. Once we get down into discount, I am no longer looking for bearish price delivery at that point. Okay. So ultimately, from this point, we have two imbalances here from a monthly perspective. We have multiple here on a weekly perspective. This low is a little sus right here at 15,595. Okay, that could be a potential area of draw. But ultimately, if we look at it from a quarterly perspective, we really could reach below this quarterly imbalance. And as long as we close back above it, it's no problem. At that point, there's no real reason for me to be continuing to look lower. But at this point, right, that's my higher time frame draw. I believe that we're going to go get that 16,334.062. And to me, that is a discount bullish imbalance. Doesn't really seem like a bad time for this to catch and start to move up again. Okay. But how am I going to be certain about this? I do not want to catch a falling knife. If you've been following me on Twitter over the last 3 months, you've known, because I've said I've been making it a point in each one of my live calls and every single one of my tweets. Until an imbalance forms, I am not sold on bottom. Okay. Until an imbalance forms, I am not sold on bottom. Go over to your daily time frame. Okay. And go through all of this madness here, right? Let's swoop in. And here. Good. Okay. Go through since the beginning of this descent on February 17th. Go through each one of these green candles. Have we formed a bullish imbalance on any of these daily candles? No, Mando, we have not. We have not. And therefore, anytime you're catching one of these pretty violent green candles, you're setting yourself up to catch the knife. There is nothing suggesting that we need to move higher whatsoever on any asset, index, you name it, doesn't matter, until you form that imbalance. Now, look, that sounds pretty great, right? It's great that I say that, but now let's look for, we need to do this. We need to look for ourselves until that first imbalance forms, and we can go through each price run forever. It doesn't matter. And we can do it this way anyways. All right. Until we form that imbalance, there is nothing justifying a sustained move higher. Okay. Now go back to 2022. Here's your first imbalance. What happens following your first imbalance? Price gets in. Price gets in. Price gets out. Thank you very much. Okay, let's keep going. Even inside of these smaller fluctuations, okay? Keep going. Where are we? Here. Okay, a little bit of a downturn. I think we could all agree, right? First imbalance, gone. This is a volume imbalance. Beautiful. Okay, look for our next downturn. Where were we? Okay, let's see. Okay, down here. Okay, pretty big drop here. July 2023. First imbalance, gone. Okay, I just want you guys to see this. Okay, how about here? It's a pretty sharp drop. It was a couple days, right? April of 2024. First imbalance, gone. Okay, keep going. You can do this forever. And I urge you and I challenge you to back test this for yourself. Okay, it's going to make you feel a whole lot better about it. Okay, even inside of here, really, however you want to slice this. First imbalance, gone. First imbalance, gone. First imbalance after these two down close candles, gone. Okay, inside here, nothing was suggesting any bounce whatsoever. Okay, you could save yourself a lot by just waiting for that first imbalance to form. Okay, so that really to me is the the big takeaway from this. Okay, while yes, we are approaching higher time frame discount levels, which is a beautiful thing. Okay, happened very quickly. That's, to me, a good thing. I would much rather prefer something like this versus 2022, where it's long, it's drawn out, it's painful. This ripped the Band-Aid off. This got down to discount in a hurry. Okay, but this from a quarterly perspective is a level that I deem very, very important. Okay, if you go down into smaller time frames, you might see some levels that are in this vicinity, which is okay. Just note that I know we have 2 months left in this quarter, but this is where I need this to close above from a quarterly perspective. Okay, Do the same thing over here from a monthly, 2 imbalances right here. This one lines up perfectly with your quarterly. This one's a little lower. Does it give you the wick and go possibility? Okay, but until that smaller time frame, for me in particular, a daily imbalance forms. At that point, I will feel much better about some sustained upside to, at the very least, gravitate towards some of these higher imbalances. Okay, so does that make sense to everybody? Are you a little less stressed now? But that's why I think I said it was important that you needed to go back and look at the pinned tweet on my page. I not for the view. I appreciate the view, but just to see how often price gravitates towards discount or below that 50% mark of a given price run. And once you start to see that, you can't unsee it. And that happens on any time frame. It doesn't have to just be higher time frame. It can also occur on smaller time frames as well. Okay. So that's my overview here on the indices. Okay. Now I'm going to pivot. I'm going to start looking into some other names, individual names. Okay. So while we do this, I'm just going to trim this again. Okay. And we'll come right over here. Boom. Okay. And we'll look at some individual names from this point. Okay. The one that I really, I'm hawking. Okay. And it got pretty quick. It got there pretty quick in this overnight session. Not quite where I want it yet, just like NASDAQ, right? SPY satisfied its downside to me. NASDAQ didn't. I would really prefer NASDAQ to satisfy that downside in order for me to feel really comfortable about beginning to look for longs again. Now, very similarly here, as we talked about on NASDAQ and the S&P, you have NVIDIA, low, high, discount. We are not quite discounted. Discount starts at $81.97. Okay. That's right off 50%. That is equilibrium of this current price run from October 22 up to January of 2025. Okay. Where I want it more specifically, not just off of discount, right? I look at discount, and discount is a great tool, right? 50% shows you exactly where fair value of a given price run would be. But for me in particular, I am, really zoning in and looking for that imbalance that coincides with discount of that range. And on NVIDIA here, you have a quarterly imbalance that begins at $75.52. Okay. Now I work my way backwards always. Okay. Here's from a monthly perspective. Okay. You have your low up to your high. We have not formed that first imbalance just yet, likely here. Okay. We could still get down into this discount and look where that 75 matches up with. Okay. We have a swing low right at 75. Taking out this 75 swing low would also be considered a turtle soup or an internal range liquidity sweep. Okay, so we're taking out this liquidity, these stops in this area right here, right? Because if you had to think about this from a wide lens, right? Think about it. Liquidity. Okay, what had to have happened at that exact point that I have my mouse on right now? What is the only logical explanation for price to put its foot in the ground right there and start moving higher? The answer to that is somebody had to have gone long. Somebody with a substantial amount of money, groups of people had to, with a substantial amount of money, got together to ultimately push price higher from that point. Now, if price were to go below that low, we are engaging stop losses in this vicinity, and we are engaging that liquidity. Without liquidity, the market is not going to move. Liquidity, aka money. Without money, the market's not going to move. Okay, so ideally, from a monthly perspective, we can get down into this 75.52, ultimately closing the monthly candle above 75.52. To me, that is very important. That would protect the low and ultimately give me some confidence that price is ultimately going to start gravitating higher. Okay. Now, from a weekly perspective, okay, very similarly, okay, we have our whole little mapped out here. Very similar. Here is that swing low that we referenced before, and here is that imbalance that coincides with that internal range liquidity sweep. Okay. So just all things considered, and let me also just show you an example of this. Okay. So the last time this happened, right? Oh yeah, you could say this all you want. Guess what? It's happened already. low, high, discount retracement into a bullish quarterly imbalance, sweeping liquidity in the inverse direction of your overarching trend. Goodbye. See you later. Okay. Now remember, these are quarterly candles. This can take time. We are witnessing a higher time frame trade take place. Okay. Our smaller time frames for weeks and weeks. If you've been listening to any of the content that I've been putting out, and I know I haven't been putting out as much publicly, it's mostly been just for the group, but inside of this, think about it. What inside of here is enticing? What inside here is telling you, oh, yeah, this is going to absolutely erupt back up to those highs? We had one imbalance that was already filled. We had nothing else being formed in this whole price run higher. This move can be totally justified. They just needed an excuse. And what's the excuse? Tariffs, trade war, this, that. Okay. There's nothing here to catch. Okay. And you can look at the last time back in 2022 when this happened as well. Throughout the duration of this whole run here, right? You were creating more levels. That's the time aspect of this. This took way more time to ultimately gravitate down towards discount. But if you go through each one of these price runs, okay, bullish imbalance here, bounce, okay? First imbalance forms, that's suggesting discount, okay? Ultimately flushing down through lows, high, down to your low. Here's a discount retracement. Here's a bearish imbalance. There's your flush down through lows. Mando model complete. Here's your next. From your high down to your low, discount retracement, bearish imbalance, also bearish breaker, high, low, higher high, break down and through. We would anticipate the low of that sequence to act as a resistance level moving forward. Rejection, flush, beautiful. High, down to our low, discount retracement, bearish imbalance, flush down through lows. Why at this point would we put our foot in the ground and stop doing Mando models to the downside? Higher time frame discount. Zoom out. Ain't she beautiful? Ain't she beautiful? Okay. So I think that's really all I have for in terms of NASDAQ and SPY. I know I referenced it again, but that's what I had at least for that. Okay. Now I want to talk about our buddy BTC. Oh, you heard the whisper? I don't know if you could hear it or not. Yeah. It's how the market works. All right, so let's go. We'll come back over here and we'll take a look now at Bitcoin. Bitcoin. I know this is a fan favorite, so let's do it. Okay. Now, let's take a look. Stacking sats over here with fold. Okay, so from your lows of October 2022 up to your highs of January 2025. There's one thing that you're going to note that's a little different between Bitcoin and the indices, NASDAQ, ES, Russell, Dow, whatever you want to look at, right? But one thing that's different is that we currently have an imbalance that is in premium of this price run, okay? So remember, I'll split them again just so you can see the difference here, okay? And the S&P is on my other side here. Whoops, here, okay? Low, high, not quite discounted, but we do have an untouched bullish imbalance, okay? It's worth noting, okay? Now, if you were to take a look over here, we are in discount on the S&P, okay? Is this going to hang me up? I personally believe that Bitcoin's ultimately going to get down into this imbalance, and from getting down into this imbalance, we believe that price is ultimately going to run higher from this point, okay? Is it my favorite setup? No. Why not? It's not in discount. If it was in discount, right? And you could say, well, Mando, I have a smaller time frame range that looks something like this. And I would say, yeah, same. I agree. Okay. If you go over to your weekly, that's exactly what it looks like. Here. Whoops. Low, high, discount. So you're discounted on your weekly. It's not quite on the monthly. So to me, or the quarterly, I'm sorry. But to me, for the best setups to occur, I have all my time frames operating in that same direction. And ultimately, what is that direction, right? So for example, your monthly, we're not quite there, but getting into that quarterly imbalance at 76,600 down to 70,016, that gets you into that quarterly imbalance. Good. Come on over to your monthly. Is your monthly range any different? Not quite. You are still in premium of your monthly as well. Has there been any imbalance here suggesting that price needs to go to discount just yet? Mm-mm, right? First imbalance, right? Just like how we're talking about when do we identify that low? First imbalance forming on the daily will give me the confidence that we will start to make moves higher, okay? And that doesn't mean that it's going to be a smooth shot back up to those highs. We have a ton of levels that were created in this downside run, but to me, ultimately, if we could start making progress and shift structure, shift smaller time frame structure bullish, that's going to just essentially create Mando models to the upside till we get to that higher time frame target. Okay. But we are not discounted on our monthly. We are on our weekly. So right now we're missing a couple, you know, ingredients, which is not the worst thing in the world. But to me, the best setups would occur when you have a monthly bullish structure, weekly bullish structure, daily bullish structure, and so on. And then you could, when I have identified that draw on liquidity, that to me, you're going to be on the right side of the trade. That doesn't necessarily mean you have to buy the absolute bottom and just hold it until the top and the highs. That's something where you can even trade smaller time frame using that higher time frame bias. Okay, I'd posted a tweet over the weekend and I'd said, do you think having a bias is good or bad as a trader, right? And I think my answer, was shocking to a few people, where I had said, I don't think it's necessarily good or bad. I think it's actually a necessity. I think you need to have some sort of directional bias in terms of where you believe price is going to draw towards as a result of your current market structure, your higher time frame market structure, right? Because if you don't have that, when you trade smaller time frame setups, they might be the most beautiful setup and then they fail on you and you question, I don't know why this failed on me. I can't believe this failed on me. I really have no idea why it would have failed on me. I've seen this setup work so many times. Odds are it's because your higher time frame isn't operating in confluence with your smaller time frame. And when that doesn't check out, that's when you're going to get those beautiful setups blown up. If your weekly is suggesting that you need to go get a swing low, that bullish setup on your hourly time frame is going to get washed. Okay. So that's Bitcoin. That's just another one I wanted to touch on. Okay. Before I keep going here, wow, we have over 100 people on Rumble. Holy crap. Sweet. Yeah. So again, like I said, I really hope, what I'm showing you guys here tonight, it'll at least get you to take a breath. I know a lot of people are panicked out here, but before we keep going, if you have any more tickers that you want to take a look at, drop those in the sidebar, and we can get to those too. But we'll talk about positive first. So if you have a dog, we've all been there. Our pup goes from full of energy to sick and miserable in an instant and at the worst time. Then we're calling vets in the middle of the night or on weekends trying to find a clinic that will take us in. It's a terrible way to manage your dog's health, not to mention your stress levels and your monthly budget. That's why people are getting the Pet Emergency Kit by Positive. It contains critical medications and supplies that can not only keep you out of the veterinary office, but may even save your dog's life. Their kits contain critical medications like activated charcoal, styptic powder, and more. It might save your dog's life. Head over to positive.com and use code STUDIO to get 15% off your emergency pet kit. Okay. So now, before we continue, if you have any, please drop them in. I'm going to run through a couple more of ones that I wanted to look at so bad. So yeah, I am going to do some more stuff on YouTube as well. That's I listen to you guys sometimes, not about stocks, but heart rate currently 52. Let's see what mine is. Oh, mine's way higher than that. Probably because I'm yelling on here. Let's see. Oh, cool. Nice. For sure. We'll look at Coinbase. Yes. Okay. Yeah, tariffs are a great excuse. Yeah. I mean, he could say whatever he wants. He retweeted that video. Whether he's intentional about it or not, discounts come. Just go back to literally the beginning of time. I love doing this. I have to do it, guys. That just stoked me. If you're pissed that I'm about to review this again, blame Grayson. But we're going back. We're going back in time, baby. Let's go. Ready? We're going to go to the beautiful year of 2000. Maybe even before that. Okay? Want to see the Mando model in action? Let's do it. Okay? Ready? Player one. Okay. So this is right, like right at the beginning of NASDAQ, the futures ticker, right? But nonetheless, okay, you had your run up in 1999. Bang. Okay. What happens? First imbalance forms here. First imbalance forms. Price retraces back up into that first imbalance that forms and flush. Beauty. Okay. Now off the lows. Whoops. Okay. We got some little fluctuations in price. We took out these highs right here, this high as well, with what price run? From your low up to your high. Huh, 2007 highs, huh? Wow. Okay. First imbalance forms. Price retraces into that first imbalance. Discount. Where's discount? Right here. Bullish imbalance. Adios. Complete. Okay. So that was just 2000. Your little I don't want to say little, it was pretty big, but your 2000 tech bubble burst. Okay. Also thrown in the mix, you had your first, 2008 great financial crisis. Let's come on over to the cocoa here. Okay. So COVID's a little bit more funky, but it's okay. Okay. You might say, your range is a little different now. This is a breaker. Low, high, lower, low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward. When you form that breaker, you need to readjust your ranges, of course. Okay. Now, zoom in. Okay. Lows. Why would I use this low and not this low right here? Inside of this price run, we already completed Amanda model. That's why. Okay. Low, high, discount, bullish order block, run for highs. Okay. So that's why my low would not be there. Got it. Low up to your high. Here's your discount retracement into a bullish imbalance for a run on highs. My bad. That was 2018. That's okay. Probably the last time the tariffs happened, right? All right. So then low, 2018 low, up to your pre-COVID highs. Here's your discount retracement. Here is your bullish imbalance. There is your run for highs. Mando model complete. That is back in 2020. Okay. We did the whole one over here on 2022. That was a long drawn out bear market, but your lows up to your high. Here's your discount retracement into a bullish imbalance. There's your run through highs. Mando model complete. Okay. So, again, I show you guys the Mando model not to be bragging or anything like that, but just to show you that Seeker, it's coming. It's just the way the market works. Okay. So next, let's do that Coinbase for that was a request over here. So let's look. Coin. Alrighty then. Okay. So whoops, I gotta fix this. My bad here. And let's rechart this whole thing. This is a monthly setup here, but here. Okay. So all-time Coinbase highs down to your low. Okay. This is technically a bearish structure. Now, this company does not have all the data in the world. Just to put it lightly. Okay. It debuted in 2021. We're in 2025, 4 years. All right. But it's not all the in the world, right? We can't go back to 2000 like we did on NASDAQ on this one. Just worth noting that this is technically a bearish imbalance. Okay. There was no wick on the other side of that candle. Ooh, that actually doesn't look too terrible, but I'm going to not leave that green and red. Okay. Price gets up into that bearish imbalance. There is your flush. Okay. Beautiful. Now, with Coinbase, this is one thing that I want to keep note of, okay? This is a previous bearish imbalance that was mitigated with that price run, ultimately getting back up into your bearish imbalance here. Now, from this point, look from your price run, from your lows up to your highs, okay? We are back inside that inverse imbalance here, okay? This is really where I wouldn't want to lose. This level right here in particular, okay? Because previous resistance flip support, this is where I think this is a necessity, which if it didn't already happen overnight, this is what I would fully be anticipating, 146.12. Now let's go down to a smaller time frame and do the same stuff. Okay, we're going to sweep turtle soup, sweep liquidity inside this overarching bullish range. Now, what mark is that? 114. Oof, that would be really disgusting. Now, I don't know exactly where we are in the overnight session, but again, this to me is the spot that we need to hang on to. Okay, this is a very, very small bullish imbalance here, but it is one nonetheless. But yeah, this to me seems like it's going to get tagged, and I actually wouldn't even be shocked by this 114. Again, I don't know exactly where we are currently in the overnight session. Let's come on over here. Okay, that seems likely here. That 146. Yeah, I wouldn't be shocked if we get that 114 sweep either. Right, especially with Bitcoin approaching that higher time frame bullish level. So, yep. So that's what I think about Coinbase. I don't think very highly of it. I think it's got some range, but again, I don't even know. Like this overnight, like tomorrow morning, us opening up, I'm gonna have a much better idea as to where it is. But okay, let's see what else. All right, we got a couple more. There was one more I want to show. I'm gonna show you Tesla too. Let me mix in Tesla. I did ES already after this video. You could it was just right off the top. Okay. Sure, we can do those 2 KD. My beautiful girlfriend wants to see GME. We love your trading strategy. All right, cool. Yeah, we can look at GME for sure. And Hood. Cool. All right, let me do first, let's go through and we'll do Tesla first. Because Tesla it's kind of like NVIDIA. And we can do Google too at the same time, actually. Okay, so Tesla, from your low up to your high, here's your discount right now. We have a bullish imbalance here on your quarterly time frame at 212. Go back 3 weeks. I know everybody in the group remembers this. Go back 3 weeks. You could just type it in on my profile. If you just go to like in the search bar and just do @Mando Trading with the $ Tesla, you'll see we talked about 212. That was, I felt as though that close to last quarter was a little premature, not getting into that imbalance. So I think we get into that imbalance and I think we start to move higher again. But I just wanted to show you guys that. Google was another one, and then I'll get to the ones you guys want to see too. Okay, so Google's funky because Google has this imbalance here. I personally would like that. I mean, I don't know if that's gonna happen, to be honest here. It could just be one of those low wicks to close back up, but 50% is right off 144.88. This is kind of a pipe dream. If we were to ultimately see that lower imbalance on NASDAQ that I referred to earlier, still in discount of that bullish range, right? We just had multiple bullish imbalances down there. Then I think this would be at play, but at this moment, I don't know. This might be a pipe dream. But anyways, let's go over to the ones that you guys wanted to see. So yeah, no problem there. Yep. Yeah, we're seeing YouTube's getting some love. So so I did Coinbase. Good. All right, let's do Meta. I don't know exactly where Meta is. I haven't looked at this one in a long time, just to be fair. But Meta's extension was insane in comparison to a lot of the others. Just think about it this way. Look at Meta's last price run from 2012. Okay. No discount. Therefore, our range is not set. Okay. So from 2012 to 2021, it took 9 years to create this bullish quarterly range on Meta, ultimately erased by that bear market in 2022, ultimately just to get ripped back up. Okay. So yeah, Meta is kind of terrifying. But again, this range is huge, and it was huge last time on Meta as well. But from your lows up to your highs, discount on Meta, whoa, okay. Sometimes things just are a little too crazy. Okay. Look how perfectly that quarterly imbalance lines up with 50% of the range. I'm just going to note this for myself. Let's see. Okay. So discount begins at 413.96 with that bullish quarterly imbalance there as well. You also have a bullish breaker. The bullish breaker starts a little bit lower though, 382. That is a right here. And I'll draw it out. Okay. Low, high, lower low, break up and through. We would anticipate the high of that sequence to act as a support level moving forward. So that's Meta. Like I said before, Meta had a much larger range than a lot of the other names. I'm sure with this 5% overnight move, it's probably much lower and it's probably a lot closer to that mark. So that would be ideal for me. Okay. Oh yeah, it's all random. It's all random, right? Okay, Elf. Let's see, Elf. Whoa, nice. Okay, so let's just map this out really quickly. Okay, lows, high, discount, bullish imbalance here. Run for highs, Manda model complete. Here's your next low up to your high, relative equal highs, I should say. Okay, let's zoom this sucker in a little bit. Okay, and we are approaching that final, the last imbalance. This is showtime right here. Okay, I'll write it in. Showtime. Not bad. Structurally, really, it gives you nice structure for it all the way down here, right? You do have back-to-back imbalances, actually. Shit. Okay. But yeah, deep discount off of those highs. We are well below even equilibrium at this point, which is 121.16. Not bad. Not bad. We're approaching that quarterly imbalance right there. Notice how I'm looking at everything from the quarterly. Right now, to me, we are going through a quarterly trade. We're not really going through a weekly price run. We're not going through a daily price run. This is quarterly action. We are in discount of a quarterly range here from really whichever way you want to slice it. The S&P, NASDAQ, NVIDIA, Tesla, all of them. Okay. So let's see. Sure, I'll do that one too. Yep, no problem. I got time. All right, let's do Nike. Seems to be one everyone is panicking about. Sure. Okay, so just to be fair, I've not looked at Nike in a very, very long time, so I'm not really all that sure. Okay. Okay, let's see where Nike is on this quarterly. Whoa, look at the size of this range from the lows of 2009 up to the highs that were formed in October of 21. All right, let's just see. All right, so for me, for Nike in particular, I see it right off the bat. Okay, we swept quarterly low here. Beautiful. Okay, now let me just erase this. We ultimately, oh, hold on. Okay, we had this imbalance. We had a quarter bounce out of that imbalance, right? You still have the relative equal lows below. That's just goes to show, right? You can get that bounce, but here's a bearish imbalance here. I think this is a monthly imbalance that we ultimately reject. Sweeping quarterly lows. That's pretty good. I see one thing that I'm not really loving all that much, and that's low, low, low. You see that? That is what we would call relative equal lows. That's a lot of liquidity resting there. But this is a mitigation block, okay, which is, we'll save that for another time. But we do have a mitigation block, also bullish imbalance, and we swept internal range liquidity. Could I see it bouncing from this point? Sure. The same rules would apply. I would then need to go to a smaller time frame and identify the formation of that first imbalance, which would suggest ultimately price making its way back up towards 50% of that given range. So, for example, we look at it from a daily. Okay. Now, whoa, baby. Okay. So look, yes, we have our quarterly run. We have our quarterly run all mapped out. But we got to also look at it from that daily run, okay? Your most recent daily run looks something like this. We took out this low with what price run? High, whoops, down to your low, okay? The first imbalance here, forming here, this is a bullish order block. That's a good start. But the first imbalance here would, to me, suggest price goes to 50%, aka my OddNAM model, one of the other models that I talk about, okay? There it is. Okay. And on Friday, if you go to my page, go back a couple tweets, you'll notice that I traded the OddNAM on SPY like 3 times throughout the day. Turned out to be really, really good. Okay. And that was all from smaller time frame, 5-minute trades. Okay. Now, from this point, if you form that imbalance, you start to make progress up. This is really the spot to beat. Okay. This is what I would deem that showtime level. We not only have that bearish volume imbalance in discount of this bearish price run, but we also have a bearish breaker, high, low, higher high, break down and through, and we would anticipate the low of that sequence to act as a resistance level moving forward. If you are to beat this, what is that suggesting to me? Our higher time frame discount has been satisfied. It's go time. We don't need to go see this. But a rejection from this point, and my expectation is ultimately that we do end up going down to see this, okay? And at the moment, nothing to me from a daily perspective is suggesting we even need to go up here just yet, okay? What would be the suggestion? That price would ultimately start to make its way up here, a bullish imbalance to show me some urgency to move up into discount and go get some liquidity to the buy side. Okay, so that's my little Nike breakdown for you. Nike's at 54 on Robinhood. Yeah, so it's somewhere in this vicinity here. Yeah, no imbalance, nothing suggesting higher. Yep, same thing would apply. Does have relative equal lows. Yep. Um, okay, so we did ES earlier. You can go back to the beginning of that video. WTI, sure. We can do WTI. I usually chart uh CL, but no worries. Okay, so looking at it from a quarterly perspective. Uh-oh. Uh-oh. Bullish imbalance here. We're close. Close. Okay. So we had our shift in structure here. Okay. By taking out this low, we have a high, I'm sorry, low, high, discount retracement into a bullish imbalance. You got 2. I wonder if we go to a yearly, we can be more specific with this imbalance. Not really. No. Okay. So, yeah, I don't know what you're thinking, KD, but somebody check in on our buddy, the one that didn't. He thought oil was going to the moon. What happened? That was from February. If you type in at Mando Trading Oil, you'll see my thoughts. Also, KD was in on those talks as well, but we had anticipated lower prices for energy as well. So let's see what's next. What was the other one KD wanted to say? Wow, we've been pretty steady Eddie at 100 people watching, so that's cool. I think everybody's probably pretty panicked by that overnight action. So hopefully you came here tonight and you took a deep breath. But all right, ASML, sure, we can look at semis in total, and I want to show you guys one more semi. This one got me last time I tried to trade it, so I'm coming back with a vengeance here. Not ASML. I'll do the one that I was talking about after this. But okay, so here's ASML. Low, high, discount, COVID, bullish imbalance, run for highs, Mando model complete from a quarterly perspective. Low, high, discount retracement, bullish imbalance, run for highs from a quarterly perspective, Mando model complete. Low to your high, discount retracement, nice. ASML, I think ASML is going to smell 55183, relative equal lows here. I don't know where it is overnight. It might even be here, but pretty darn close. Okay. The one I was referring to before, it got me last time I traded it. I ain't letting it happen again. This is ARM. Okay. So relatively new company as well. Only trading since 2023. Not new company. This company could have been around forever. I'm talking about data wise, stock wise. But here's your low up to your high. Here's your discount into a bullish imbalance here on the quarterly time frame. I don't know where this is. This could also be a wick, give you the heart attack, ultimately closing the quarterly back inside of this imbalance. So just another name that I'm keeping tabs on, because to me, respecting this imbalance is a very good thing moving forward. And smaller time frame, you've probably seen want me do these before, but here we'll go back. All right, ready? Low, high, discount, bullish imbalance, run for highs. Low, high, discount, bullish imbalance, run. Okay, so but yeah, that's just another one that I saw. I saw the quarterly imbalance. I was like, oh damn, I got another one. Okay, let's see. AXP, sure. AXP. Okay, pretty close. I see what you're looking at there. Definitely. Actually, do I? Low, high. Yeah, we did. Look how perfect that is, bro. That's beautiful. Okay, hold on. Let's just go back. Going back in time. Let's go back to the great financial crisis. Low up to your highs. You got your discount retracement. Here is your bullish imbalance. There is your run for highs. Let's zoom in. Zoom in on this beauty right here. Wow. Okay. Let's go to our next. From your lows of 2016 up to your highs of pre-COVID. Discount retracement, which was COVID. Bullish imbalance. Run for highs. Mando model complete. From your lows up to your highs to the tick. 50% of your quarterly range. Bullish imbalance here. You also have a bullish breaker. Low, high, lower low. Break up and through. Here is your quarterly breaker. We would anticipate the high of that sequence to act as a support level moving forward. High of your sequence, discount, bullish imbalance, goodbye. Okay, here's your next from your lows up to smaller time frame run, still plays, discount, bullish volume imbalance, run for highs, random autocomplete from your lows up to your highs. We are discounted. Preferably, you would see that 212. From my point of view, at least, there is an imbalance here. We very well could wick this, but also discount has been satisfied here on AXP. Okay. Let's see. Thanks, dude. Yeah, I don't know. The following thing, it's tough. People just get suckered into the stupid shit that they see all over the place on X, and they always end up in the group at the end. That's usually how it works. You get burned for a couple years chasing after these idiots who don't know what they're talking about, and then you find a group of people who know what they're talking about. So that's good. 212 overnight for AXP. Wow. So we are in that quarterly imbalance. Nice. But yeah, thank you. Yeah, I got a bunch of people on X, but you know what it was when I came in 2020? It was just like every day it'd be like, oh my god, I got 100 new followers. That's not the case as much now. The algorithm changed and everything like that, but it's all right. But thank you. NQ kind of moving. Yeah, we have SMT right now. I'm not sold. I'd prefer that quarterly imbalance there for NQ. Yeah, I can do GME. Yeah, I'll do GME right now. Yep, I think that was next anyways, right? Yeah, GME for show. Okay. So look, I know GME is like totally, I mean, look, they're all manipulated, but like GME obviously much more so than others, I believe at least. Personally, I think I wrote this one up a little while ago actually, but I think GameStop could see 1873. That is a quarterly bullish imbalance here. We are inside a bullish imbalance. So here's the thing, like we don't necessarily need to get into this. It would be preferable as as an outsider at the moment, right? I don't like to buy it off of air, knowing that this is a possibility. I'd prefer to buy it off of a level. Therefore, that way I have my risk reward much better defined. But you could also make the argument that you have a low, high, lower, low, break up and through. This is a bullish breaker, and we're currently inside of that quarterly bullish breaker. I wouldn't fight you on that. Again, just structurally, especially with the relative equal lows that you left behind on the previous quarters too. I personally would like that. And then from there, I definitely want to see GameStop move higher because this setup, how many times did I just show you the Mando model? It meets the criteria, checks all the boxes. It's just a matter of when. That's my only thing. And do we need to go see this again? Again, as an outsider, somebody's not really a part of this at the moment. That would be where I would want it. If I miss out on it, that would really stink. But it is what it is. I don't like to chase. More often than not, you're going to get busted for chasing like that. So, let's see. GameStop under 20. Yeah, they got the imbalance there at 18. Yeah. No, I know. I mean, think about it. Think about all the FUD, right? And now you're going to have people, everybody's going to, when the market pumps, you're going to have all these people just flipping on a dime. Like, oh, I told you so. And it's like, all right, where are your tweets, buddy? You know how it goes, but it's always the same there. All right, let's do Robinhood and then NUE, and then we'll hit it. Hood. Okay, so Robinhood is inside a quarterly imbalance. I don't if Katie, if you're on Robinhood, just give me a look where exactly it is in that overnight session, please. But Robinhood does have a quarterly bullish imbalance. So here's another one. Here's just it doesn't have all the trading history in the world, right? You're working with from 2021. You are up in that 50% mark, but there's no bearish imbalance here. So I'm not really anticipating this reject down through lows. Honestly, I think we're going to go to 85 eventually. This seems like a pretty good spot to do it, starting in this imbalance. Now it's a 10-point imbalance. It's pretty big. And I'm just curious where exactly we are in that overnight. 31.55. Okay. So 31.55. Yeah, puts you right inside this imbalance. So then look, here's how I'll just go through how I tried my best to identify a top-notch setup. Quarterly, check. That looks pretty good. Okay. Come on over to the monthly. Does the monthly agree? 31.55, I think that mark was, you said. Hold on, I gotta pull it back up. I don't have the monitor, the other one on. Yeah, none of them saw any downside. No, that's why I was trying to for a long time there. Just like nothing suggested it from a higher time frame perspective. For me, I wait for the imbalance. Did we have weekly imbalances? Yes. My biggest thing was like, there's really not much supporting this up here. As you can see, we kind of just sliced through every weekly level that we had. And now, again, it would be easy for me to say this and just make it up. Just if you were to go back 2 months on one of my weekly prep streams, you're going to hear me talking about that. So that's why. Hood lows at 29. Don't worry about the wicks. It's the bodies that are telling you the story. So 31. So yeah, right around 31. So you're inside this monthly bullish imbalance and discount of the range. Okay, not bad. Okay, come on over to the weekly. Let's just see if it checks out across the board. Good. You got a bullish imbalance right here as well. Yeah, I don't hate Robinhood. Now there's a bunch of bearish. Actually, I shouldn't even say that. There's literally one bearish or two bearish levels that were just created. You're gonna have the gap down. You're gonna have this bearish fair value gap, and you're gonna have this volume imbalance. Other than that, you're really not working with too much bearish overhead. So yeah, Robinhood looks pretty decent as well. But now, what's gonna be the biggest confirmation for me would just be the formation of one bullish imbalance. That's all. Just form one bullish imbalance, and then at least you could say, all right, here's your most recent price run. Okay, I know I need to be cautious when we get to 50% of that price run, which is right around 40.72. Look left, we're in the imbalances. Here, this would be an area, and then that would be an area. You get by that, I think you're in pretty good shape. Okay, so that's Robinhood. Yes, Grayson. Yeah. I'm gonna pull that one up too. Then, yeah. Let me just see. I just don't want to make. I want to make sure I didn't scroll past any up here. Oh, NUE. Sure, let's do NUE. Bet. Okay, look, yearly fair value gap here. That's where I have my alert set. I'm way ahead of you here. Actually, that's a problem because it's not even the right yearly. Oops. Okay, here. It should be here. I don't know what happened there. I might mess with it. Yeah, so 84 gets you into that. I don't know exactly where we are in the overnight session, of course, but that seems like a pretty good spot. That is a yearly bullish imbalance. The last time you had something like this, you had a low up to your high. You got your discount retracement into a yearly bullish imbalance. You got your run through high. So, yep, not quite there. I don't know what it is overnight. I doubt it dropped 20 points. This doesn't really seem like it's one of those that move like that, but okay, so that's NUE. Let's go to LMND, Lemonade. Okay, Lemonade quarterly wise, it's not formed a quarterly imbalance, no problem. Come on over to monthly. Okay, bullish imbalance here. You have a lower bullish imbalance with a bullish breaker. That seems likely. If you go back to the last time we talked about this is really the mark that I had said, but think about it, anything in discount, ultimately, if price is going to where you ultimately believe it's going to draw towards, it's just an area in which you could beef up a position. But yeah, so far, so good. You got that discount imbalance here. This one's pretty big in terms of range, right? You're playing for a pretty big win, but also susceptible to decent number. But yeah, no, nothing has changed inside this setup. It's still pretty good. And yeah, a lot of the other DCAs are firing up. So I don't know if I'm going to be buying as much as I have been of this, but still one that's fine for me. Let's see. So that's that. And yeah, it looks pretty fine. LMT, utter destruction war is over. LMT. Whoa, baby. Yikes. Yeah, it's got a big range too. Yeah, these are a little sus. I mean, this is really, really far away. I don't know if I would necessarily anticipate something like this happening, but yeah, this is got relative equal lows down here too. 50% of your range is all the way down here. Yeah, that's a pretty scary one. I wonder if the quarterly shows anything there on LMT. Oof. Yeah, dude, I'm not crazy about this one at all. Got a big ass range. You could dip like 378 and not go down to discount if you don't form that imbalance, but yikes, it's a big one, big range there. But all right, let me just pop on over, see if anybody has any questions or anything. 373 is your target. Nice. Yep. Let me see, any more questions? Do I got to do any more of these reads? Sure. Yeah, I gotta. All right, this is 5G free. This one is a little outdated, just a heads up. If it even lets me do it. See this platform, it's really I want to talk to you about the things that people are afraid to say out loud. Who is in control of America's nukes? It's not Biden. Meanwhile, we have Russian ships off the coast of Florida and full-blown wars in Ukraine and Israel. The world is at its most unstable point since World War II, and with nuclear weapons, the stakes are 10 times higher. How do people like you and I stay safe? Every prepper needs a RadioGuard ACE, the only FDA-approved drug to treat radioactive fallout. Only the feds had it until now. That's why Rumble partnered with 5G Free, the only company in the world that has a supply of RadioGuard ACE and the ability to prescribe it prophylactically. Get their radiation emergency kit with RadioGuard ACE, potassium iodide, Zofran, and a Geiger counter. There's simply no other tool in your arsenal to protect against a radioactive threat. Go to 5gfree.com, code STUDIO, to save 15% and get your radiation kit now. All right, so let's see. Last look in the chat really quick. 1776 coffee is Seeker's favorite coffee. Please don't disrespect that. So yeah, that's all I got. But again, like I said from the beginning of the night, I hope that it's very easy just to turn on Twitter and feel as if the world is ending. But when you put it into a higher time frame perspective, I hope you were able to take a deep breath and relax a little bit. Think about it. How many times in the past have you said, "Oh, I'm kicking myself. I missed that low. I missed it." Right? Well, nobody wants to buy stuff on red candles, and nobody wants to sell stuff on or short stuff on green candles. That is human nature. It's pretty fascinating, but through time you will learn that more often than not, those are often the best times to take chances, because your risk reward is highly weighs on your reward side. And as long as you can map an idea, you can structure an idea, and you have an idea of where you could pull the plug if it goes poorly, that's all you can ask for, right? You're not going to be right on all of your trades, but at least if you have structure in a way where, okay, if I'm wrong here, this is where it's going to be wrong. I got to pull the trigger. That loss would be X amount. Can I stomach that? If I can, great. If I can't, I go look for something else. But that is the way I go about it. So, but anyways, thanks for everybody who's coming on. Again, hopefully it was a beneficial one, and I will catch everybody soon.
Oh, I'm so happy! I'm so happy you are alive! I'm so happy!
Welcome to the 2025 Mentorship. 26 new educational videos, bi-weekly class assignments, weekly live trading, and weekly class sessions only in Galaxy Trading. See you there.